Most banks do not like being paid off early because they want to make money off of the money that they've lent you. Hi guys, and welcome back to my channel. Before I go any further, make sure you click the subscribe button below and click the bell icon as well so you can get notifications every time I post. So as the title of today's video suggests, we're going to be talking about mortgages. I feel like the word mortgage is like such a grown-up word. I remember growing up thinking, oh gosh, like not knowing what it was. I remember that loads of adults and grown-ups would talk about it, and it's not until you come to sort of buying your first property or starting to venture into that kind of portion of adulthood that you start to, realize, oh gosh, like you don't really know what it is and you kind of have to educate yourself on it. So today's video, I was going to talk about my remortgage because I've recently remortgaged on my property, but I thought actually it'd probably be best to just go back to basics because I appreciate that some people might not even really know what they are. So I'm going to try and do a quick summary, which is not easy. And I'm not a mortgage broker or a mortgage specialist by any means, so please don't take my word as gospel. I'm just going to kind of just talk you through my experience of buying a property, mortgages, in the hope that it can help some of you guys. So let's take it back to basics. How does one actually go about buying a property? So there are essentially two ways. You can either buy a property with cash, so you buy it outright, or you can buy it using a mortgage and getting financing from a bank or a lending institution. Now, most people do not necessarily have cash lying around to just buy a house outright. So they will tend to use some of their savings or cash that they've saved up. They'll go to a bank and say, I want to buy a property. I have exactly this much saved up, and the property that I want to buy is of X amount of value. Can you lend me the remaining amount of that property value? And a bank will either say yes or no, depending on various criteria, which I can't really go into right now. But that is essentially what the sort of property purchasing process, mortgage is. Now, when you're getting a mortgage, I would definitely advise looking for a broker that can actually talk you through the various products on the market. Because you could go direct to your bank, your high street bank, your NatWest, your HSBC, your Lloyds, etc. But, they might not necessarily give you the best rate available. A broker will have access to the market and will understand all the products that could possibly be available to you, and they will give you, that rundown, and then you will be able to select, okay, I want that product over that product. When you go to your broker, they will want to know roughly the value of the property that you're looking to purchase, how much equity or how much cash you're going to put down, and they'll ask you things like your age, your income as well. And then they will sort of go in their little computer thingy and basically have a look at what products are available to you. And it's at that point that you will then need to decide whether you want to pay, how you're going to pay that mortgage back. Let's say that there is a bank or a lending institution that is willing to lend you up to 70% of your property's value, and you already have or can get that 30%. So on the 70% that they lend you, that is the debt. So a bank or a lending institution does not lend for free. We live in a capitalist world. Nothing is for free. So that money that they've lent you, for the period of which they're lending it to you, which is normally about 25 years, they're going to expect to get some kind of return on that. So that is the interest that you'll be paying. So you'll have your debt, which is let's say the property is £100,000, you're putting up 30 grand, the bank is putting up 70 grand. The bank will give you that 70 grand, and they're going to expect an interest payment back on that. So there'll be a percentage, it'll be either, anywhere between sort of 2-5%. Interest rates vary depending on the base rate, the Bank of England base rate, which at the moment is rising. So yeah, there's all these various metrics, but essentially you're borrowing money from the bank and you're going to have to pay that money back, including interest. Now, when you choose your mortgage payments, you're going to be paying normally on a monthly basis. So you can choose to either pay just the interest off, or you can do a repayment, which is you're paying off both the interest and you're paying down some of the debt that you owe to the bank. Depending on what reason you're buying that property, whether it's to live in or if it is to invest, you might choose to you might either choose interest only or repayment mortgages. Now, in my case, I was buying my property as a buy-to-let mortgage, and in that particular circumstance, I was requested, or I was asked to put up 25% deposit of the property's value, and the bank paid the remaining 75%. And I chose to do an interest-only payment because I did, right? I mean, there are reasons why investors prefer to go interest only, mainly because you're usually paying off less money on a monthly basis, so you have a bit better cash flow. And also, as an investor, your kind of exit strategy usually is to hopefully either refinance or to, sell the property and release some equity in doing so. But I digress. Let's not get into that too much. So essentially, you've got your two options: interest only or repayment mortgage. Now, once you've decided on those two, you then need to decide, okay, the rate that the lender will give you is not going to be forever, unfortunately. So they'll give you a rate and they'll say, okay, do you want to fix this rate for either 2 or 5 years? Now, in terms of fixing, different people have different opinions as to whether you should fix for 2 or for 5 years, but it's all very much based on the individual. In my circumstance, because I didn't know whether I'd be selling the property in 2 years, refinancing in 2 years, or I didn't really know what was going to happen, I didn't want to fix a rate for too long of a period, because when you fix a rate, if you, let's say you want to pay off the debt early, you will incur some charges as well. So I thought, well, actually, no, I don't want to, there's too much uncertainty in holding or fixing for 5 years. I'm only going to fix for 2. Now, there are other investors and other people that, are savvy about the economy and know that and can see that interest rates are increasing. So sometimes it's better to fix it for a longer period so that you can fix it at a good rate now and then avoid any interest rate increases within that sort of period that you're holding it for. So those are the kind of options that you will be given, and it's all about sort of looking at the various products, researching it, weighing up the pros and cons of everything, because one product for someone might work better than another product for another person. So it's all about sort of speaking with your broker, really understanding the products that are available, reading the terms and conditions to understand, if you are to pay off early, are they going to charge you and how much are they going to charge you? And also another thing to ask when looking at mortgages is whether you can overpay. If you get out a mortgage, most likely they'll give you a loan term. So they'll say, we'll lend you this much for 25 years. Most people don't want to be paying a mortgage for 25 years. You might come into a windfall of cash and want to pay off the rest of your property or the debt on the property. And most banks do not like being paid off early because they want to make money off of the money that they've lent you. So if you want to pay off early, they will charge you a fee, early repayment charge, and it's good for you to ask your broker to figure out how much that charge would be, and then if you can overpay, how much are you allowed to overpay by. So for example, on the current mortgage that I'm on, I'm allowed to overpay each year up to 10% of the remaining loan value. So I probably my loan is about 50 grand, let's say, I owe the bank. So on a year-on-year basis, I can overpay them up to 5 grand, as my loan term goes along. But yeah, that's really getting into the nitty-gritty, I'd say, but essentially that kind of is an overarching view on what mortgages are. It is a bit of a, I don't know, to some people it's a boring topic. I find it quite interesting because obviously I'm in property, but I'm hoping that I was able to maybe answer some of your questions or, you know, queries that you might have regarding mortgages. I am not a mortgage specialist by any means at all, and I think, you know, you can't really cover the depth and the nuances around mortgages in a 10-minute video, unfortunately. So I'm gonna look to do some more, maybe like a mortgage series, as it were, like do like smaller sizable chunk videos, which kind of gets into the nitty-gritty of what mortgages are, you know, and any questions that you might want answered. And I will look to try and get a specialist on as well that can actually give you a bit more specialist advice, really. Unfortunately, that is it for this video. I hope you found it useful. If you did, give it a thumbs up and don't forget to subscribe for new content every Sunday. Thank you so much for watching. See you next time. Bye.